मैं फंसा हूँ। Hello everyone, welcome back to EduTap. Please let me know if I'm audible. Hello. यार. Please let me know if I'm audible and visible to all of you. दिन ही खराब. Yes. यार PPT क्यों नहीं आ रही? वही ना PPT. एक बार आप check. Yes, I think everything is going good. Thank you, Nilesh. Jaskaran sir, please come, sir. Why you are standing over there? Yes, everything is going good. Thank you so much for the confirmation. So finally, me and today Jaskaran sir will start our, I would say, finance marathon session in which we are going to discuss again 100 questions, 100 good quality questions, which definitely will help you to cover all the important components of your exam. Okay, so what will be the pattern? First 50 questions I will take, and then to help me 50 questions will be taken by Jaskaran sir because he has certain extra proficiency in those chapters. Okay, so Jaskaran sir, any words to start?
The only words that I would like to add is that please be with us till the end of this session, and please try to be as interactive as possible during the session. That is the only thing I want from you. And the second thing is your 100% attention. So let us begin the session. Jalit sir.
Cool, sir. Okay, sir. So I will start with first question. Chaliye. So let's start this beautiful marathon, this action-oriented marathon. Please take your utmost participation. Otherwise, there is no meaning to sit over here and do your time pass. So let's start by first, I will tell you, sorry, just give me a sec. I have to remove this banner. Yes, let's start this particular session. Okay. First and the foremost thing which you have to remember is that PDF of this particular PDF of this particular marathon will be available on the Telegram group of EduTap. The link of the same is given in description box below. And yes, if you are new to our YouTube channel, then please subscribe to it for some quality content. Let's start with our question number 1 on the screen now. Question number 1 is on the screen. I will move myself away from the screen so that you can check all the relevant things. Please answer question number 1. Question number 1 on your screen now. I hope the brightness is okay now. Chaliye, let's see who gives me the right answer for question number 1. Yes, everything is going good. Thank you so much. Question number 1 on your screen. Try to answer the question. Identify the process where the investors determine the present value of the future payment of the receipt or a series of future payment or receipts. Yes. If you know, there are two basic concepts in finance. You have your present value and the future value. To go from present value to future value, we use the component of what? We use the component of your what is this happening? We use the component of your compounding. Okay. And to come from present value to your from your future value into present value, we use the component of discounting. Now the question says wherein the investor determine the present value. So you are determining the present value. Therefore, the answer will be over here, will be discounting. Okay. So first answer, option number B. Good. Everyone is giving the right answer. Let's move to question number 2 now. Question number 2 on your screen. Question number 2 on your screen. Very less participation from the students. Try to take part in huge numbers because these marathons will benefit you a lot. Question number 2 on your screen now. Let's see who gives me the right answer for question number 2. Question number 2 on your screen. Let's see who gives me the right answer for question number 2. You can use the dash rule to estimate how many years a given sum of money must earn at the given compound annual interest rate in order to double that initial amount. So I'm getting the answers as A, rule of 72. Yes, you have basic three rules in, I would say, time value of money chapter. Rule of 72, rule of 72, rule of 144, and rule of 114. Tell me in which particular rule my money will become 3x. In which particular rule my money will become 3x. Yes, 72 is used. 72 is used for doubling your money, which is 2x. But to double my money, which particular rule I will use? Which particular rule I will use? Please tell me your answers in the chat box. I am waiting for your answers. Come on, please participate. My question is very easy. For which particular, like for example, if you are using rule of 144, if you are using rule of, there is no rule of 24 by the way. Rule of 72 is used to 2x your money. Rule of 144 and 114 is used for what? Simple question. Rule of, chaliye, let's see who gives me the right answer. Let's see who gives me the right answer. Chaliye, tell me the right answers. Yes, very good. I am able to see the right answers. Good. Please tell me. I'm waiting for some more answers so that you can tell with full confidence. Yes, 144. 114 for 3x. 144. Good. 17. You know the answers, right? 140, 114 is for 3x and you have 144 for 4x. Good. Chaliye, now let's move to the next question, which is the question number 3. Question number 3 on your screen. Question number 3 on your screen. Let's see who gives me the right answer for question number 3. Yes, very good, Pratiksha, you are right. Himanshu, you are also right. Nandkumar, you are also right. Question number 3. Now we are moving towards our first core chapter, which is your bonds. If you see, time value of money is just a basic chapter. But when it comes to bonds, definitely questions will appear from this particular chapter in your exam. So let's see who gives me the right answer for question number 3. Indian government decides to issue the bonds in yen. So Indian government is issuing the bonds in your foreign currency. These type of bonds are known as what? These types of bonds are known as your what? These types of bonds are known as sovereign bonds. Very good. These types of bonds are known as your sovereign bonds. So your answer will be option number C. Now tell me that particular type of bond which will give you zero coupon, or it is known as zero coupon bonds only. We have discussed this a lot, right? So I'm not discussing it again. Which type of bond, which particular type of bond, let me just make a question, allows the investor to sell the bond back to the company? Which type of bond is giving the power to the investor to sell the bond back to the company? This particular type of bond is known as what? Which type of bond gives the power to the investor to sell the bond back to the company? Which type of bond I am referring to? My question is very clear and straightforward. Why I am not able to see your answers? Please respond in the chat box. Which type of bond? Yes, very good. These types of bonds are known as your puttable bond. Okay. Opposite of your puttable bond, or you can say the opposite concept of your puttable bond is seen in your callable bonds. Okay, callable bonds. So definitely over here the answer will be sovereign bond. Yes, out of term and serial bond. Which particular type of bond will have multiple maturities? Which type of bond will have multiple maturities? If I talk regarding, I would say if I talk regarding between term and serial bond, which particular bond will have a multiple maturity? It will not. Which type of bond has multiple maturities? Yes, very good. The answer will be serial bond. In serial bond, you have multiple maturities. In term bond, you just have one maturity. Sovereign bond, we have explained. Corporate bonds are as good as your debentures. If you see, corporate bonds are those bonds issued by your private entities, and they carry an higher risk as compared to a government bond. Government bond is issued by Government of India in the same country only. Like if Government of India is issuing a bond in India, then it's known as government bond. Okay, but sovereign bond is Government of India issuing the bonds in yen, so it will be sovereign bond. Okay, so let's move forward now to question number 4. Now we have question number 4 on our screen. So let's see who gives me the right answer for question number 4. Question number 4 on your screen. Question number 4 on your screen. Question number 4, my friends. Try to answer it. Identify the type of bond. Identify the type of bond which are speculative in nature. Speculative as in that you are not able to identify that whether they carry higher risk or lower risk. They have low credit rating and have high yields. They have high coupon rates and they may give good returns. They may give. They are not telling you surety. Then which particular type of bond we are referring to? Is it your, I would say, junk bonds, hedging bonds, equity bonds, high return bonds? Definitely the answer will be junk bond. A junk bond is that particular bond which is having a low credit rating, and definitely these bonds are very, very riskier. Over here, the risk is comparatively high because these bonds have low credit rating. Okay, low credit rating, very easy to remember. Now let's move to the next question, which is a question number 5, which is a question number 5. So let's see who gives me the right answer for question number 5. Hedging bond was just a term given to confuse you. You do not have to remember it. Like for junk bonds, the credit rating is low. Simple. You do not have to remember that whether it is below B or above B. Above B to nahi hoga, below B hona chahiye, right? Because above B, then definitely these bonds are moderately safer. So it has to be below B only. Yes. If a government of India, increases interest rate, then what is the likely effect on the bond prices? अगर गवर्नमेंट ऑफ इंडिया ने इंटरेस्ट रेट बढ़ा दिए या किसी ने भी बढ़ा दिए, why it only be government of India, then what will be the effect on the prices of the bond? Please tell me. If your interest rates are increasing, definitely that will have a negative relationship on the bond prices. Agreed or not? Price will fall because of inverse relationship. Yes, the price will fall. Therefore, the answer will be option number B. Now, if I ask you what is the relationship between interest rates and yields rates, what is the relationship between interest rates and yield rates, then what will be your answer? If I ask you what will be the relationship between interest rates and yield rates, then what will be your answer? Interest rates और yield rates में क्या relationship होता है? Positive, negative or neutral? Positive, negative or neutral? Positive, negative or neutral? Yes, very good. If you see in bonds, there are 3 very important relationships which you have to remember. Now, there is no time right now to explain you everything, but you have to remember these 3 relationships for sure. Bond prices, and these are your current market prices of the bond, not the face value. Okay, these are your current market prices of the bond. So bond prices are kind of negatively correlated to your interest rates and to the yield rates, but interest rates and your yield rates are positively correlated. This you have to understand. Bond prices are negatively related to your interest rates and yield rates. Okay, but your yield rates and your interest rate is positively correlated. Okay, so over here the answer was option number B. Let's move forward to question. Yes, bond prices will fall. Okay, bond prices will fall. because there is a negative relationship. So answer will be option number A. Clear or not? Hello, I think I just did a mistake. If their prices are reducing, if the Indian government is increasing interest rates, so increasing means what? Your bond prices will fall. So answer will be A, not B, because I just misread it. Very silly mistake to do, not an issue. Chaliye, question number 6 now. Yield is question number 6. Question number 6 now. I just misread the questions on the last slide, not an issue. Mistakes can happen, but I hope the better sense prevail. I hope the better sense prevail. 6. Question number 6 on your screen. And I will again ask you, just for your sake of information, is the next previous question number 5 was clear, right? The answer will be A and not B. The answer was A and not B. Clear, right? Please confirm. 6, the lock. Bullion. Everybody is going with bullion. Please let me know is the answer for question number 5A is clear to you or not, because I just misread the option, so there was a lack of clarity. But I hope the concept was clear to you, that how bond prices are negatively correlated to your interest rates. Cool. Chaliye. So 5th A was correct, but by mistake I marked the answer as option number B. Not an issue. We all are humans and humans can make mistake, but we have rectified the same also, so not an issue. Dash is the market along with the buyers and seller trade gold, silver as well as associated derivatives. Now there is no components like shine market, jewelry market and something. The answer will be bullion market. Now give me certain examples of bullion. Give me certain examples of bullion. Like for equity we have shares, but in bullion market what you will trade? 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 Definitely in bullion market the very two important components are your gold and silver. Okay, your gold and your silver. Now if you see, if you are buying derivatives based on gold, if you are selling derivatives based on gold, then definitely they will come under your bullion market. Cool. Let's move forward to question number 7 now. Question number 7 on your screen. Which of the following? Yes, gold, silver, commodities, precious metals. Yes, platinum. Largely it is gold in India and silver in India. Platinum is, I would say, yet to be discovered, I think. Chaliye, question number 7. Question number 7 on your screen. Question number 7. Question number 7, my friends. Which of the following is not a feature of derivative? Every derivative contract must have an underlying. Yes, it is true, because derivative, the name is derivative, derived from something. So answer over here cannot be A, because A is a feature. Derivative value is linked to an underlying. Yes, this is also correct. Derivatives can be used for hedging. Yes, this is also correct. Derivatives are mostly traded on the stock exchange. No. Okay, not all derivatives are traded on stock exchange, but definitely we can say that some of the derivative contracts are traded on stock exchange. Now my $1 billion question to you is, in OTC market, which is your over the counter market, which particular derivative contracts are traded? There are two derivative contracts which are traded over here. Name them. What are the name of two derivatives contract which are traded over here? No, Vishal, not all are the features of derivative. Mostly derivatives are mostly traded on only on stock exchange. Only because of only statement number D is incorrect. Only नहीं होना चाहिए था यहाँ पे. Please tell me the types of derivatives which are traded on the over the counter. Please tell me. Yes, swaps and forwards. Very good. You have your forwards and your swaps which are traded on the stock on the OTC market, and your futures and options which are collectively known as FNOs. These are traded on your exchange. So these are known as exchange traded derivatives contract. Exchange traded derivatives contract. Therefore, the right answer of this question was option number D. One more question before I move ahead. The value of derivative. Value of derivative has dash relationship with the value of underlying. With the value of underlying. What is the relationship between value of derivative and your underlying? Positive, negative, neutral. What will be your answer? There is dash relationship between value of derivative and the value of underlying. What will be your answer? Yes, there is a positive relationship. Very good. Or you can say direct relationship, which explains you that if the value of derivative is increasing, then the value of if the value of underlying is increasing, then the value of derivative will also increase, and vice versa is also true, which means that there is a direct positive relationship. Good. Let's move forward to question number 8 now. Question number 8 on your screen. Question number 8 on your screen. Try to identify the correct answer for question number 8. The question says, there are many participants in the future market. In the same regard, identify the parties of the stock exchange who bets on the derivative market based on his or her views. Actually, he is not actually interested in buying. Sorry. Do not blame me. He is actually not interested in buying or selling the shares, but carries out trade in the anticipation of making profit. Chaliye, tell me the right answers for question number 8. Speculators, are anticipators, or arbitrators? Hedgers are the one who play safe. Hedgers are the one who play safe, right? So they will play safe. Anticipators are no term. Profit maker, again, there is no term. Arbitrate, yours is a term, not arbitrators, but some people also call it as arbitrators. The right answer will be option number E. Good. Chaliye. Now moving ahead to question number 9. Question number 9. Question number 9. Read the following statements and then select the right code. Read the following statements and then select the right code. Question number 9 on your screen now. Forwards are standardized, futures are customized. Statement C is counterparty risk in future is less than the forward contract. Chaliye, tell me the right answer for question number 9. Who will give me the right answer for question number 9? 9 I am receiving as C. Forwards are standardized. No, forwards are your customized. Futures are customized. No, futures are standardized. Okay, futures are standardized. So your A and B are incorrect surely. The counterparty risk in future is less than the forward. Yes, this statement is correct. Can you tell me why? Can you tell me why this statement number C is correct? What is the reason that why statement number C is correct? Can you please tell me your answers? Why your counterparty risk basically means the cheating risk by the other person. Sometimes it do happens, right, that you are doing a transaction and the other person cheats you. But over here, you just have to tell me that why counterparty risk in future is less than the forward contract. What is the main reason behind it? Come on, I'm looking for your answers. I'm looking for your answers. Yes, because of SEBI over here. SEBI act as a regulator. SEBI, Securities and Exchange Board of India, is over here to make sure that no party does any kind of cheating. If you do cheating, then definitely be ready for penalization as well. Now my $1 billion question to you before I move ahead. The answer over here will be C, because only statement C is correct. Now my answer over here is, my more question over here is, tell me out of futures and forwards. The FU stands for future, FO stands for forwards. Price discovery. Price discovery will be high on which particular side? Price discovery will be high on which particular side? Will it be on the future side or will it be on the forward side? Price discovery ज़्यादा कहाँ होगी? Where will you see more price discovery? Futures or forwards? Come on. Tell me your answers in the chat box. Where will I find higher price discovery? Yes, very good. Suhani, Akib, 3 classes. Yes. you will have your higher price discovery in futures. Because the number of people who are present in the futures market are comparatively higher. One more question before I move ahead. If I am talking regarding, I would say, liquidity. If I am talking regarding liquidity will be highest in which particular component? Between futures and options, liquidity will be highest in which particular derivative contract? Please tell me, in liquidity के point of view say, where will I have the highest, I would say, please tell me in which particular sector, in which particular, rather I would say derivative, you have the higher liquidity. Definitely the liquidity is higher on your, again on future side. You can just remember that in future you have high number of buyers and high number of sellers. Because of this, your price discovery and your liquidity in futures is quite high, as high as possible. Okay, in forwards, low number of buyers, low number of sellers. Make sure that the price discovery is low and make sure that your liquidity is also low. Chaliye, on that note, let's move forward to the next question, which is the question number 10. Now we have moved ourselves to question number 10. Question number 10 on your screen. And yes, hardly I would say 24, 25, 26. 3 more days, not included today. 3 more days where you will be giving your SEBI Grade A Phase 1 exam of the year 2024. So let's check your preparation with finance today. Marathon is going on. Please answer all the questions. The question says a derivative value increases, decreases, fluctuates, remain fixed. What will be your answer? Suhani is going with C, Rohan is going with C, Akib is going with C, Pooja is also going with C. Yes, Nikichet is going with B, decreases. Okay. Roberto, Simran, Shishmat, all of you are going with C. Yes, it fluctuates, increases with the expiry date approaches, decreases as the expiry date approaches, fluctuates as per the spot price of the underlying asset. Definitely your answer has to be option number C, because if you see my friends, the value of derivative always is related with the underlying asset. So if the prices of underlying asset is increasing, the value of derivative will also increase. If the prices of underlying asset is decreasing, then the value of derivative will also decrease. So there is a positive relationship. This we have discussed previously also in the same session. Now my question to you is, every derivative contract needs to have an underlying asset. How many categories of underlying asset are there? First you have to tell me how many categories of underlying asset are there. 1, 2, 3, 4 or 5. How many categories of underlying asset are there? Underlying asset की कितनी categories होती है? 1, 2, 3, 4 or 5. Choose any one among them. Definitely your answer should be option number 4. That is there are 4 types of underlying. You have shares of the company, which is also known as the equity. You have your currency, you have your interest rates, and then you also have a commodity. So answer will be option number 4 over here. Chaliye. Now we are moving ahead to question number 11. Now we are solving one question related to swap. Yes, if the criteria is, I would say, time, then definitely you can agree on that. Because in the maturity, you can definitely say that value of derivative decreases, but that was not the question over here. Now we have moved to question number 11. Question number 11 on your screen. Chaliye, give me the right answer for question number 11. Question number 11. Question number 11. Consider the following statement and please select the incorrect one. Yes, definitely swaps are not your exchange traded derivatives. These are your traded on the OTC market, which is your over the counter. Let's move forward. Question number 12. When it comes to regulation of your currency and interest rate derivatives, these are regulated by whom? Previously also I have discussed this question. On that particular note, again, I'm discussing this question because many a times people were not able to give the answer of this question correctly. Question number 12. Currency and interest rate derivatives. Sorry. Currency and the interest rate derivatives. कुछ समझ में नहीं आ रहा है, मैं हूं या नहीं. Please participate. Ignore all these peoples because they will just put your distraction away. They will put attention away. They will distract you. So please try to be responsible. Focus on the class. Question number 12. Interest and currency derivative markets are regulated and supervised by whom? Yes, very good. This time I am seeing that all of you are telling me the right answer, which is jointly by RBI and SEBI. But if I say equity derivatives, or to certain extent commodity derivatives, then these types of derivatives are driven by whom? Driven as in that who regulates them? Who regulates them when it comes to currency derivatives and commodity derivatives? Currency derivatives and commodity derivatives, who regulates them? Yes, this time your answer should be only SEBI. Only SEBI. The exam which you all are preparing for. Okay. So if you talk regarding equity and commodity derivatives, then only SEBI. But currency and interest rate derivatives is with RBI and SEBI because of the regulations perspective. Let's move forward to question number 13 now. Beautifully presented on your screen. So let's see who gives me the right answer for question number 13 now. 13 says, identify the special type of option wherein the option strike price is identical to the price of underlying. Option ka strike price is equals to the underlying strike price. What will be the correct answer over here? Yes, who will give me the right answer? Option strike price is equals to your underlying strike price. Now we all know that there are, I would say, multiple types of options, but the two basic one are your call and your put option. Okay, I will come to this question later, but let's discuss regarding call option first. A call option will be called as a in the money option only when your strike price is more than your current market price. Is this true or false? Please tell me your answers in the chat box. If I talk regarding your, I would say, call option. For call option to be in the money, strike price has to be more than the current market price of the underlying. Current market price को spot price भी लिख सकते हो of underlying. Is this statement true or false? What will be your answer? Let's check that who has done the revision. Let's check who has done the revision. False, false, false. Everybody is saying false. Anyone who would like to break the chain and they would like to go with true? For my call option, my current market price has to be more than the strike price. Therefore, the answer will be false. But if I ask the same question for put option, if I keep everything same in put option this time, previously call option, but this time we are going towards put option. Put option in the money. Put option in the money. If my strike price is more than my current market price, will I be in the money or not? True or false? Assuming that premium is zero. Okay, premium का amount मैंने assume नहीं करा है कुछ भी. This time my answer will be. So basically the concept says that in call option, if your current market prices are above your strike price, then this amount is your profit. Simple. And vice versa happens in your put option. Under put option, definitely your current market price should be low than your strike price. Simple. Okay, so this will be your profit, and we are only talking regarding the buyer side. Okay, B-U-Y-E-R. Okay. Now this is in the money. In the money means someone who is in profit. Okay. Out of the money means somebody who is in losses. But when it comes to your strike price becoming equals to your current market price, this will be known as at the money. At the money, yani profit is equals to losses. Simple. Or you can say profit is equals to zero losses is equals to 0, or you can say profit is equals to losses. So over here answer will be option number C, that is at the money. I hope the concept is clear to you. Now let's move to question number 14. Question number 14 on your screen. Question number 14. Question number 14 on your screen. So let's see who gives me the right answer for question number 14. 14 talks to you regarding the Depositories Act. And also please let me know how many depositories are there in India. How many depositories are there in India? 1, 2, 3, 4, 5. These are your options. How many depositories are there in India and they are regulated by which particular act? What will be your correct answer for question number? What will be your correct answer for question number? What will be your answer for question number 14? Chaliye, who will tell me the right answer for question number 14? Yes, there are two depositories, NSDL and CDSL. Okay. Now, Depositories Act was passed in the year 1996. When was SEBI Act was passed? Very easy. I hope you all will say 1992. Okay. Very easy question. Chaliye, let's not waste our time. Let's move ahead to question number 15. Question number 15 on your screen now. Question number 15 talks to you regarding question number 15. Question number 15. Question number 15. Identify the date on which all those who are on the record as shareholder of the company gets the benefit of corporate actions of the company. Corporate actions as in like dividend announcement, split announcement, bonus announcement, bonus share announcement. So what will be your answer for question number, I would say 15? Yes, it's record date. It's record date. So whosoever is on the record date, whosoever is in the register of the company till record date will get the benefits, other will not get the benefits. Question number 16 now. Chalo. Question number 16. Let's see who gives me the right answer for question number 16. Question number 16 talk to you regarding the amount, the minimum amount of block deal. The minimum amount of block deal. Is it 1 crore, 2 crore, 10 crore, 20 crore or 2.5 crore? What will be your right answer for question number 16? 16C. Okay, we will check whether it is right or wrong. C, 10 crore. And like block deal, we also have your bulk deal. Like block deal, we also have your bulk deal. Bulk deal में what is the condition? Bulk deal के अंदर what is the condition? Can you tell me? Under your bulk deal, what is the condition? Under your bulk deal, what is the condition? Under your bulk deal, what is the condition? चलिए क्वेश्चन नंबर 16 नाउ. Bulk deal के अंदर the limit is your, what is the limit under your, I would say 0.5% of the actively liquid shares. Okay, but when it comes to block deal, the answer will be option number C, 10 crores. Very good. चलिए, now we are coming regarding question number 17. 10 crore or 5 lakhs in number. Question number 17. Identify the securities that gives holders the right but not an obligation to buy a certain number of securities. One such important characteristics of these securities are they are often referred to as डिटैचेबल्स के कारण आंसर बदल सकता है. मार्क योर आंसर्स. What will be the answer of question number 17? 17C, call option. 17B, put warrant. Put C. D. C. C. Again C, C. Many people are going with C. If C is right, then why not B? If C is right, then B भी तो सही हो सकता है, because call and put comes from the same family only. The only difference is in the nature. If your C is correct, then your B should also be correct. Holder the right. Identify the securities that gives holder the right but not an obligation. So this is present in your put and call both only. In put option, the only difference is the holder gets right to sell. Okay. In your call option, the buyer gets right to buy. So if call is right, then put should also be right. Then answer cannot be option B and C. Use your logic. अगर B सही होता तो सही C भी सही होता. So B and C cannot be your right answer. Therefore, the correct answer will be warrants. Option number D is the correct answer. Because warrants are detachable. Detachable means either you can use them with the main security or either you can sell them in the market also. So warrants are like you can detach them. You can detach them from a main security. Therefore, the right answer will be option number D. It's warrant. Okay. Swaps doesn't make any sense because in swaps there is no obligation and there is no right. So answer will be option number D. This I have told to you. Warrants are the securities that gives holder the right but not an obligation to buy certain number of securities at a certain price before certain time. One important characteristics are that they are detachable. Okay, detachable mean अलग कर सकते हैं. Okay, question number 18 now. Question number 18 on your screen. Yes, buy means what? So is it right to buy or is it right to sell? Then only you will mark call and put. In warrants also you buy. So buy doesn't mean that it will be call option always. If I am today buying something, it doesn't mean that I am buying call option. Call option gives you right to buy. This is the correct term for call option. Right to buy. This is the term for call option. Buy. Buy doesn't mean call option. Call option has been given by right to buy and not by just simple buy. I hope the doubt is clear now. Otherwise, you can share one more doubt in the chat. Question number: following financial institutions can take part in call money market except. Following institution can take part in call money market. First of all, tell me what is the overall theme of call money market. Call money market में होता क्या है? Just tell me that. Who participates and they do borrowing and lending within whom? Like in T-bills, Government of India borrows with the help of RBI. Okay. Government of India gives commands to RBI. RBI, please issue a T-bill, and then RBI issues a T-bill to the general public. Okay, but what is the overall logic when it comes to call money market? Can you tell me call money market mein who is the borrower, who is the seller and everything? Please let me know your answers in the chat box. Once again, please explain call money. Usually forgotten, call confused. Call money market is between banks. Like if bank 1, which is your SBI, and your, I would say, bank number 2, which is your, I would say, Punjab National Bank. They are looking for some short term. They are looking for some short term money. Okay, so Punjab National Bank can lend to SBI. SBI can lend to another bank. So call money market is that particular market in which the borrowing and lending happens between different banks. Okay, and it is very much quick. It is very much quick. Like you can do 1 day borrowing, you can do 2 to 14 days borrowing, and more than 14 days up to 1 year. So that is also allowed. But your call money market is very quick. Now, if you see, scheduled commercial banks can participate, RRBs, regional rural banks can participate, primary dealers can participate, payment banks, small finance banks, but your large development banks does not participate. Therefore, your answer will be option number E. Okay? Chaliye. Now we are moving ahead to question number 19. Taken from your call money only. Question number 19. Question number 19. Question number 19. 19वां question. Question number 19 on your screen. Identify the type of money market where money is borrowed for more than a day up to 14 days. So if you see a call market, call money market, call market is that market in which you do lending and borrowings for 1 day. 2 to 14 days happens in your notice market. And above 14, you can say from 15 to 1 day, 1 year. 1 year happens in your term money market. So your answer will be option number 2 to more than a lend a day up to 14. So answer will be option number B, notice money market. Let me see what you all are saying. Yes, the answer will be option number B. Chaliye, now we are moving ahead to question number 20. 20. What is the minimum value for certificate of deposit that can be issued? Certificate of deposit, the minimum value has been asked to you. So tell me who will give me the right answer for question number 20. For certificate of deposit, definitely the minimum value is 1 lakh, right? Minimum value is 1 lakh or 5 lakh? 20th A. Oh shit, what is this happening? Is my screen getting blurred? Is my screen getting blurred? Please confirm in the chat box. I will call someone who can check it. Is everything going right? Please confirm. Screen is not clear. I will just call my technician. But you also have to tell me certain, I would say, other features. I will just call someone. Don't worry. There is no need to worry. This is all noise which can happen. I will just get it checked. Do not worry. You just have to let me know. You just have to let me know. Certificate of deposit. The minimum amount is 5 lakh. This I also know. But what is the minimum maturity? Rahul sir, please come in the class 2 minutes. What is the minimum maturity? What is the minimum maturity when it comes to certificate of deposit? Minimum and the maximum also. Minimum and the maximum. Screen is dancing. Not an issue because of budget. I think screen is dancing. I think now it's clear. Please check. Yes, clear now, right? स्क्रीन है ना ये बार बार ब्लर हो रही है फोकस हमेशा so definitely for your certificate of deposit the minimum number of days is 7 days and maximum it can be issued for your 1 year. Okay, but this is just for your banks. But for all India financial institutions, they will issue a certificate of deposit for minimum of 1 year to maximum of 3 years. Okay, very easy. Chaliye, now we are moving ahead to question number 21. Question number 21 on the screen. ठीक है, बीच में लुक जो हो रही थी. Not an issue. ठीक है, चलो. Question number 21 on your screen. Question number 21. According to Companies Act of 2013, an offer to subscribe securities is not made than more persons to a private placement. Definitely, we all know the answer has to be 200 people. So your answer will be option number B. Your answer will be option number B. Chaliye. Next question, my friends. Let's move ahead. Now we are moving ahead to the next question. 22. Chaliye. Tell me the answers for 22. Question number 21 is solved. 200 was the answer. This we already know. But now we have question number 22. Among the following bears the entire risk of selling the stock issued during an IPO? Who takes the risk when it comes to selling of the stock issued during an IPO? So who will take the risk? Please tell me. Is it your, I would say, auditors, directors, underwriters, SEBI, or is it your NSE and BSE? Please tell me your right answers in question number 22. Yes, underwriters do take your risk if your IPO is undersubscribed. The right answer will be option number C. But my basic question to you is for equity issue. For equity issue, if I'm doing IPO or if I'm issuing equity, then dash percentage of your issue size has to be achieved to call this as a successful IPO. What is the minimum amount a company has to raise of the issue size so that company can proceed ahead? Your options are 70% of issue size, 85% of issue size, 90% of issue size, 90% or 75% or none of the above? 70s, 85, 90, 75 and none of the above. Please tell me. Yes, the answer will be 90%. And if I go, this is your equity. This is your equity. For debt issue, if I give you the same options, 70, 75, 90, 85 and none of the above. For debt issue, what will be your answer? If I ask you the same question, but I have just replaced the words. Previously it was equity, now I am saying debt. For debt it will be, very good Ashutosh ji, it will be your 75%. Okay. So do remember, these are very, very important numbers when it comes to your chapter of finances. Chaliye, question number 23 now. And do let me know whether my speed is okay or not. And is this session good or not, so that I can come to know where I have to work on. Question number 23, taken from the chapter of financial markets. Question number 23. A preliminary prospectus where the exact details of the shares like number of shares, price of share is known as golden prospectus. But in your, I should over here write price band of the shares. Okay, यहाँ पे price band लिखना चाहिए. Price band, BAND. चलिए, tell me the right answers for question number 23. Yes, it's your draft red herring prospectus. Good. Okay, let's move forward. It's very easy. Draft red herring prospectus contains all the details of the company. Okay, like what the company is doing, what are the projects of company, what is the price band of your issue size. Now, if I just wanted to check your knowledge again, if my company is having a lower price band and if my company is having a higher price band, okay, this is my lower range, this is my higher range. For example, this is 100 and this is 110. So this becomes your floor price and this becomes your cap price. Cap is your like highest price. The difference as per SEBI, between lower price and your higher price band cannot exceed what percent? 10%, 20%, 30%, or 40%, or is it 50%? The difference between the lower price band of the company and the higher price band of the company cannot be more than 10%, 20%, 30%, 40%, or 50%. Tell me your answers in the chat box. All of you are going toward 20%. Yes. So if your lower price band is 100, then max to max your higher price band can go up to 120 and not more than that. Because SEBI says that the difference between your lower price band and your higher price band cannot exceed 20%. Now we are solving question number 24. Chaliye. Question number 24, my friends. 24 has been listed on your screen. Try to answer it. ABC Limited is already listed company in the stock exchange. The company promoters want to reduce their holding in the listed company transparently. So which kind of offer they will use? The company promoters wants to reduce their holding, and it is also given that company is already listed on the stock exchange. Chaliye, give me the right answers for question number 24. A fresh issue, or it's a offer for sale, or it's a right issue, or it's a buyback offer, or it's the initial public offer. Initial public offer doesn't make any sense because the company is already listed. Now, company's promoter wants to go out, so definitely they can use offer for sale, which is also known as OFS. Cool. Let's move forward to the next question now. Let's move forward. This was an easy one, I think. Question number 25. I again repeat, there are total 100 questions. First 50 questions will be done by me. Rest 50 questions will be taken by another faculty whose name is Jaskaran sir. What is the minimum amount of treasury bills? What is the minimum amount for treasury bill? What is the minimum amount for treasury bill? Is it 5,000, 25,000, 20,000, 10,000 or none of the above? Definitely the answer will be 10K, which is your 10,000. Now tell me the maturities for treasury bill. Tell me the maturities of treasury bill. First I am saying 91 day. Now you fill in the blank for second and third. 91 डे मैंने बोल दिया है, nobody will say it. No Shantanu ji. The answer over here is 10,000, which is 10K. 10,000 and multiples thereof. Yes, 91, 182, 364 days. Very good. 91 day, 182 day, and 364 day. One more question before I move ahead. One more question, just one more question before I move ahead. In, I would say, your treasury bill. In your treasury bill, are they a zero coupon security? Are they a ZCS, zero coupon security? Are they a zero coupon security? Are they a zero coupon security? Zero coupon security yani paying no interest, issued on discount. So if a face value is of 1,000, if a face value is of 1,000, they will issue it. Issue price will be 400, but it will mature. It will mature on face value. So you are indirectly making a profit of 600. Are there zero coupon security? Your answer will be yes, yes, yes. Okay. Chaliye, let's move forward to question number 26 now. Question number 26 on your screen. Let's take some questions from mutual funds. Questions have been taken from your mutual funds. Chaliye. Question number 26. Question number 26. BSE sensitive index, Nifty index, etc. These are the schemes investing in your. What will be your answer? Yes, index funds. Very good. Index funds, which are a kind of a mutual fund scheme, they offers into one particular index like Nifty 50 or your Sensex. Okay. This is horrible, man. The answer over here will be option number C. Chaliye. Now we are moving to another question taken from your mutual fund chapter. Another question taken from your mutual fund chapter. And yes, if you have the liberty, if you have your time, then please let me know what is the difference between index fund and your, I would say, sectoral fund. What is the difference between index fund? What is the difference between index fund versus sectoral fund? If you have the time, then you can let me know your answers in the chat box. Mayank, what is easy? Please let me know. Question number 27. 1 tier, 2 tier, 3 tier, 4 tier or 5 tier structure? Yes, very good. Sponsor, trust and AMC. Very good. Your answer will be option number C. You have your three structures, which I will show you on the next slide also. These are the, I would say, structure of mutual funds in India. You have a sponsor who starts the company, then he appoints a trust, and then the trust appoints a big company which is known as AMC, Asset Management Company. These are the companies which manage a mutual fund on an actively basis. Coming to question number 28. Question number 28, my friends. Question number 28. The delivery of FX. FX over here stands for your Forex. FX over here stands for your Forex. Okay, foreign exchange market, you can take it as that. Yes, very good, Nakicheta. Sectoral funds invest in one sector like defense, IT, but your index fund will invest into a particular index. Yes, very good. Free classes. Next question is question number 28. Question number 28. Question number 28 talks regarding what? Question number 28. चलिए बताइए. There are 4 delivery systems. I hope you know, but इसका आंसर ही बता दो आप. What will be the correct answer for question number 58? Question number 58. The answer has to be between option number. Yes, now I think it's good. Question number 28. Sorry, not 58. The delivery of FX can be settled in many days in the same regard. If the delivery of the funds takes place after spot. Spot is your T plus 2. Spot is your T plus 2. T plus 1 is your TOM. That is tomorrow. Okay. TOM spot. If anything is happening after spot, it is known as your forward. Okay, cash is like on the same day. So you can just remember like cash or the spot is on the same day. So this will be your T. It will be your T. T plus 1 is your tomorrow. T plus 2 is your spot. And anything after spot, anything after T plus 2 will be your forward. Cool. So I think all of you have given the right answers, which is option number C. C right hoga, right? C is the correct answer. Moving to question number 29. Let's solve question number 29 with full energy, guys. Come on. Chat rate is reducing. I can see on my board that only 11 chat rate has been showing. Offer rate is the minimum rate in the market at which sellers are willing to sell any stock or the other security which they are currently holding. In the same regard, identify the rate at which buyers of the stocks are willing to pay. Buyers of the stocks are willing to pay. So you just have to identify offer rate का opposite क्या होता है. At offer rate you try to sell, but at which particular rate you try to buy. Is it off rate, bid rate, stock rate, security rate, or holding rate? Definitely bid rate is the correct answer. Bid rate is the rate at which buyer is willing to buy. So bid and offer. Bid means what? Buying rate. Offer means selling rate. चलिए. Question number 30 on your screens now. Good. Nilesh, Pooja, Nakicheta, Mayank, Shrimat, Ashutosh, Hari, all are getting bid rate. Question number 30 now. Question number 30 says regarding SWIFT. SWIFT का full form क्या होता है? If you can write it in the chat box, then it will be good for you. I am saying S means society. You tell me the meaning of WIFT. It stands for society. For worldwide, interbank financial transactions. Am I right? Am I right? Society for worldwide interbank financial transactions. Is this correct or wrong? You just have to tell me yes or no. You just have to tell me yes or no. Interbank. Yes, the correct answer will be interbank, which is your option number D. Now, I would say in SWIFT, there is one bank identifier code, BIC. In your SWIFT, there is one bank identifier code. Tell me the length of this particular code. Length कितना रहता है इस code के अंदर? What is the length in this particular code? Yes, very good. I was incorrect. Society for World Bank Interbank Financial Telecommunication should be the right answer. Good, very good. When it comes to SWIFT, Society for World Bank Interbank Financial Telecommunication. So this is T, telecommunication, not transactions. Okay, good. When it comes to bank identifier code, what is the length of this particular code which is issued under the SWIFT network? Yes, very good. 8 to 11. 8 to 11 should be the right answer. Sometimes it is of 8, but sometimes it can be your 11 also. So 8 to 11 is the correct answer. Chaliye, so this is your SWIFT. Answer was option number D. Question number 31 on your screen now. 31 on your screen. 31. 31. Identify the type of risk which arises due to the possibility of a major bank falling and resulting into the losses of counterparties reverberating into banking crisis. So a bank has fallen and now there is a banking crisis. Whole economy is not affected. Only the banking sector is affected. So this particular type of risk is known as what? This particular type of risk is known as what? Market risk, systemic risk, systematic risk, or none of the above. Definitely the answer has to be systemic risk. It's like I am falling, so I will make sure that other two people in the sector also falls. But is systemic risk, is it a synonym of systematic risk? Is systemic risk synonym of systematic risk? Is systemic risk is a synonym of systematic risk? Yes or no? Is systemic risk a synonym of systematic risk? Can you please let me know your answers? Or is there any difference? Systematic risk is that particular risk which is present in the entire economy. like COVID-19. Systemic risk is not synonym, so they both are different. Chaliye. Now let's move forward to the question number 32. 32 on your screen now. No. Answer was no. Very good. Question number 32. Question number 32. Identify the type of crowdfunding where the entrepreneurs pre-sell the product to launch a business without incurring debt or sacrificing equity or shares. This kind of funding is used when the project is in long gestation period. When the product is in long gestation period. So this particular type of crowdfunding is known as what? Reward, research, forward, gestation, ready. Ready कुछ नहीं होता है, gestation भी कुछ नहीं होता है, forward भी कुछ नहीं होता है, research हो सकता है. But over here the answer is option number A, reward crowdfunding. In reward crowdfunding, I will develop a product. 32A. Yes, the correct answer is A. I will develop a product and I will tell my investors that please invest my money. I want to bring out the final product. So you develop the prototype initially. You develop the prototype initially, and after that you develop your final product. Okay. Chaliye, now we are moving to question number 33. Now we are moving to question number 33. Sorry. Identify the types of investors who invest in the early stage of the company, in the early stages, and in return take the share of the company. So what are these different types of investors known as? These types of investors are known as what? Question number 33. Identify the types of investors who invest in early stages of the company and in return takes the share of the company. Venture funds, venture sharks. No, venture sharks जैसा कुछ नहीं होता है. Anchor investors, angel investors or ancillary investors. Anchor investors are there in your IPO. I hope you remember. They invest more than 10 crore of rupees. Their quota is 60% of the QIB quota. Okay, QIB stands for your qualified institutional buyers. Ancillary investor doesn't make any sense. So venture sharks भी निकल गया. You might be confused between venture funds and angel investors. Tell me. Right answer which I am seeing is option number C. Yes, angel investors. Angel investors are those people who invest into the early stages of the company. Like you would have seen Ratan Tata sir, he is a kind of an angel investor. Rocky Screwwala, again a kind of an angel investor. Now tell me, when I am comparing angel investor and my venture capitalist, okay, who will invest in more amount of money? Who will invest in more amount of money? Will it be angel investor or will it be venture capitalist? Who will have more money to invest, or who generally invest more money into the startups or into established businesses? Who invest more money? Tell me your answers. ज़्यादा पैसा कौन लगाता है? Angel investors या venture capitalist? You can use this, I would say, short forms which I have used. Please tell me. Venture investors, they establish in the, like they do not establish in the early stages. They establish after a period of time. Like they will establish in Ola, because Ola has a good amount of, I would say, what, backing right now. Okay. So venture investors is not the correct answer. Angel investor is right. Yes. Venture capitalists invest more money. They invest more money. Now tell me, out of angel investors and your venture capitalist, who will actively participate in the company affairs? It is possible that the a venture capitalist or an angel investor is appointing their members on the board of company. So you just have to tell me, out of angel investors and your venture capitalist, who will do more active interfering? Who will do more active interfering in the company affairs? Who will poke their nose more? Is it angel or is it venture? Yes, again the answer will be venture capitalist, because these are investing huge amount of money, so they will poke you more. Okay, or you over here means the company. Chaliye, so these are the differences. Let's move to question number 34 now. Question 34 is on your screen. Try to address this particular question. Identify the incorrect statement from below Peer-to-peer lending is now regulated by RBI. Yes, we all know this. Peer-to-peer lending firms can accept deposits. Okay. No NBFC institute or no non-banking institute other than the company shall undertake the peer-to-peer lending platform business. Peer-to-peer lending firms cannot provide any guarantee to their lender. You have to identify the incorrect one. You have to identify the incorrect one. Come on. What will be your answers? Yes, option B is correct. Peer-to-peer lending cannot accept any type of deposit. Do remember this. And peer-to-peer lending are regulated by RBI. If I'm not wrong, in 2017, they came under the jurisdiction of RBI. Non-banking, yes, definitely this statement is also correct because you cannot do all the businesses. Peer-to-peer lending firms cannot provide any guarantee. Yes, this is also correct. They can just be a facilitator. They can just make a platform on which a lender and a borrower can meet, but they will not make any kind of guarantee. Cool. Chaliye, now we are addressing question number 35. Question number 35 on your screen now. So let's see who gives me the right answer for question number 35. Question number 35. Question number 35. What is the primary difference between tier 1 and tier 2? This we have already solved previously also. Tier 1 capital is also known as your pure capital. Tier 2 capital is known as your impure capital. Tier 1 capital is that particular capital which I will use till, or you can say I will use it for daily operations plus for longer period of time. Tier 2 capital I will only use once my business is getting closed off. Okay, once my business is getting closed off. So if you see, tier 1 capital is used by banks on ongoing basis, while tier 2 capital is used for winding down. Yes, this statement itself is correct. So you do not have to read the other ones. Okay, you do not have to read the other ones because the question asks you difference, right? So difference has been identified in statement number 1 itself. So why to read the other ones? The answer will be option number. Only C. I can see 1, 2, 3, 4, 5, 6, 7. Out of a crowd of 50 people, 7 people are only responding. This is the level of competition in SEBI. Now, let's move forward. To question number 36. Parth, you cannot carry any kind of physical calculator. Okay, I hope that addresses your doubt. You are not allowed to carry anything which is electric in your examination hall. Even the smartwatch which you are wearing, you have to remove it once you enter into the hall. Now, Basel III, introduced in the year 2010. They have your capital buffers. What is the value of capital buffer? And post this, we will also solve some previous year questions so that we can check whether we are on the right track or not. Yes, your answer will be over here is capital conservation buffer, which is a CCB, is of 2.5% only. Okay, the answer will be option number B, which is option B, 2.5%. But if I ask you, capital conservation buffer, is it compulsory or not compulsory? Okay, capital conservation buffer is necessary. Is it compulsory or not? Parth, just assume that no calculator will be provided to you. Simple. Even if they provide you on-screen calculator, that will be as good as a waste. So just have one assumption that you will have to solve all the questions or all the equations by your beautiful hands, which God has gifted to you. No calci. This is what SEBI says. Chaliye. Yes, you can definitely expect, but hardly one. But chances are as good as 1%. Like they can ask you, the SEBI has recently increased the BSDA, that is a basic savings bank deposit account limit for demat accounts, from present 4 lakh to 10 lakh. So this basic news can be asked. Yes, I would say CCB is compulsory. Your CCB is compulsory, but there is one more type of, I would say, buffer, CCYB. CCYB is not compulsory. Okay. Chaliye, now let's move forward to question number 37. Leverage ratio, again a famous component of your Basel III. Leverage ratio. Leverage ratio. Leverage ratio. What will be the leverage ratio as per, I would say, Basel 3 banking norms? Do remember Basel. BASEL. Basel ka leverage ratio is 3%. For RBI, it is 3.5%. But for RBI, DSIBs, the domestically systematically important bank, it is 4%. But over here, they are asking you the Basel thing. So answer will be option number C, that is 3%. Now tell me, what is the capital adequacy ratio? Capital adequacy ratio for RBI, and what is the capital adequacy ratio for Basel norms? Tell me your answers in the chat box. When it comes to capital adequacy ratio, for RBI, capital adequacy ratio is what? And for Basel committee, what is the capital adequacy requirement for Basel committee? Yes, for RBI it is 9%. For Basel it is 8%. This extra 1% has been kept because of the increasingly size or the complex size of the Indian economy. Chaliye, question number 38, my friends. Question number 38. Question number 38 on your screen now. Question number 38. Yes, which of the following best describes front running? Recently, SEBI has done certain investigations in your Quant, a very famous mutual fund. So what is front running? Can you tell me? What is front running? And if you want to understand front running, then please let me know. If you don't want to know, then let's move ahead. Front running की correct definition क्या है? The question asks you very straightforward question. It can be C also. Please read it again. Please read it again. It can be C also, right? It can be C also. Read it again. Yes, the correct answer will be option number B, because in front running, definitely a broker runs ahead of you and he or she might purchase additional shares before executing your trade. Simple, right? This is what your front running is. Okay, please tell about front running. It's very easy. Like, for example, I want to buy 2 lakh shares. I want to buy 2 lakh shares of Reliance, which is a big amount of shares. Okay. 2 lakh, or you can make it as 20 lakhs also, whatever your number says. So I want to buy 20 lakh shares of Reliance. Okay. And to execute this particular trade, I have told to my broker. Okay, my broker को मैंने बोल दिया है that I want to purchase 20 lakh shares of Reliance. Definitely, my broker will play a kind of a smart game. He will say that, sir, before executing your order, I will purchase some shares of Reliance. He will purchase the shares of Reliance at a current market price. And once the execution of 20 lakh shares ka order will happen, the current market prices will increase, which will benefit the broker, because broker bought at a lower price and he will be selling at a higher price. Simple. This is what your front running is all about. Chaliye, question number 39. Now we will take 11. Now we will take 11 previous year questions. Okay. So let's see whether you are able to solve all the previous year questions or not. Corporate debt market. Corporate debt market is regulated by whom? Corporate debt market is regulated by whom? Corporate debt market is regulated by whom? So 39 पे है अभी अपन. Just let's solve 10 previous year questions so that we can gain confidence for the exam. Corporate debt market is regulated by whom? SEBI? Yes, the answer has to be SEBI. But if I make this something like this, government securities. Government securities are regulated by whom? From the same list of options. Government securities are regulated by whom? From the same set of options. Then your answer will be RBI. Good. So government securities, overall operational things. For government securities, pura lekha joka has been taken care by RBI. But for corporate debt securities, we have your SEBI. Question number 40 on your screen now. Asked in the paper of SEBI Grade A Phase 1 2020. Yes, money market is also regulated by RBI. Very good. Which instrument is used by the foreign entities not registered with SEBI? Not registered with SEBI. Definitely your FPI, foreign portfolio investors. They do need to register with SEBI. But if you do not want to register with SEBI, still you can invest in India. What is that one particular route? What is that one particular route? Question number 40. Definitely over here the answer will be participatory notes. With the help of participatory notes also, people who are not registered with SEBI, they can also participate in the Indian stock markets. Cool. Let's move forward to the question number 41. Come on, last 10 questions to go. I need full participation in the class. What is the minimum amount to be invested by anchor investors? SEBI Grade A Phase 1 2018. So those who are saying easy questions are not asked, isse easy question you will not get in your exam. If such questions appear in your exam, then try to mark your answers within less than 10 seconds. Then only you will gain a competitive advantage. Yes, your answer has to be 10 crores of rupees. Okay. So that is what I would say. Which particular question you are saying, Roberto, please let me know. I will explain again. Okay. Chaliye, now we are moving ahead to question number 42. A very basic question. Question number 42. BSC is headquartered in Churchgate, New Delhi. तो हो ही नहीं सकता. Sorry. It cannot be New Delhi, right? It has to be there in Mumbai. So those who know, BSC is there in Dalal Street, Mumbai. And your NSC is also in Mumbai in BKC, Bandra Kurla Complex. Okay. So right answer for question number 42 will be option number B. Good. Easy questions, nothing much to discuss. Let's move forward to question number 43. Previous year question of SEBI Grade A Phase 1 2018. SEBI Grade A Phase 1 2018 previous year question. Dematerialization of securities. Dematerialization of securities is covered under which particular act? Depositories Act, Stock Exchange Act, Securities Contract Regulation Act, Payment and Settlement Act. In which particular act you covered dematerialization? Dematerialization means what? Converting a physical share into an electronic form. Okay. Please tell me your answers for question number 43. 43A. Yes, Depositories Act of the year 1996 is the correct answer. And dematerialization becomes compulsory when your issue size is above dash crore. When your issue size is above dash crore. Please give me your answers in the chat box of the question which I just asked. Dematerialization becomes necessary if your if your share issue is above dash crore. Please let me know the answers in the chat box. Till then, let's solve question number 44. Yes, it's 10 crores, not 8 crore. Very good, Pooja, and very good. The student name is quite, I would say, unique. Guns and gases. 10 crore hoga, 10 crore. Okay. Chaliye, now we are solving question number 44. Open interest. Open interest indicates what? SEBI Grade A Phase 1 2020 question. Open interest का मतलब क्या होता है? Please let me know your answers in the chat box. It's Yashwant. Okay. Hi Yashwant, how are you? But your YouTube name is quite, I would say, unique. It's gun and gases. So now it will be Yashwant. Okay. Open interest indicates the number of the contracts which are yet to be settled. So answer will be option number C. Higher open interest. Now please let me know whether this statement is correct or wrong. Higher open interest implies higher liquidity. Is this statement true or false? Higher open interest indicates higher liquidity. Higher open interest indicates higher liquidity. True or false? True or false? Higher open interest indicates higher liquidity. True or false? Please let me know your answers in the chat box. Higher open interest indicates higher liquidity. Oh. higher open interest tells you the number of trades which are in the open in the market. So do search about your answer. Let's move to the question number 45. Question number 45. Which type of option trader has a right to sell the securities before maturity? Now the question clearly says that we are talking regarding option trader. An option trader right to sell. Right is always given to the buyer. Okay. So your buyer has to be there. So buyer and buyer. But which particular call option will give right to sell? Then your answer has to be put buyer. Isn't it? Yes, the answer will be option number B. Cool. Now let's move forward to question number 46. Question number 46. Question number 46. Question number 46. Let's see who gives me the right answer. Chaliye, till now I have not got the correct answer by the way of that question. Higher open interest indicates higher liquidity or lower liquidity. I again repeat. Till now I have not got the right answer, so I will still bring that question again. You cannot skip any question, at least in my class. Tell me, once the open interest is high. Open interest tells you the number of trades which are open. Like buyer has not met the seller has not met the buyer. If open interest is high, will it lead to high liquidity or will it lead to low liquidity? Simple question, true or false? Yeah, whatever you want to call it as. Yes, very good, Deepak. Anyone else? Ashutosh is also going with higher. Yes. Open interest is high, it will imply your higher liquidity, which means more number of buyers and sellers are there in the market. So the statement was true, but I don't know why people were saying false. Not an issue. When company dissolves, which of the following debenture holders have right to receive? SEBI Grade A phase 2. This is the level of phase 2. Principal and the interest is the right answer. Because for debenture holders, debenture is a kind of a debt. And for debt, principals and your interest, payment is necessary. Payment of interest and principal is necessary even if the company is going in losses. Chaliye, now let's move to question number 47. Siddharth, please check it again. It's true. When there are more number of contracts, definitely your liquidity will be high because more number of contracts will invite higher buyers than higher sellers. Question number 47. If we go by your logic, Siddhant, right? Then by this logic, the Indian share market will always have low liquidity because multiple contracts are there. So when contracts are there, when buyers and sellers are there, multiple parties are there, liquidity will be high to the best of my knowledge. Okay. Question number 47. LAF. LAF stands for your liquidity adjusted facility. Liquidity adjustment facility. It uses dash to absorb liquidity and dash to release liquidity. So liquidity release करने के लिए definitely we have the term of repo operations, and to take back the liquidity we have reverse repo. So answer will be option number B. But now please remember, reverse repo has been replaced by another tool whose name starts with S. Can you please tell me? Please tell me the name of that particular instrument which has replaced your reverse repo. Its name starts with S. MSF? No. SDF. Very good. Standing Deposit Facility. Cool. Chaliye. Now we are moving to question number 48. SDF was the correct answer. Yes, good. State Disaster Force. No. SDF stands for your Standing Deposit Facility. Which of the following is true regarding preference shares? We all know there are two types of shares, equity share and your preference share. The question asks you that which of the following is true for only preference shares. Preference shares. Preference shares के लिए क्या सही है? Preference shareholders are the shareholders and not creditors. Preference shareholders are the shareholder, yet this statement is correct. Creditor basically means that you have the relationship of borrower and creditor, right? Or borrower or lender. So that will happen in your debt instruments. That will happen in your debt instruments like bonds and debentures, or in your loan also. Okay. But when it comes to preference shares, preference shareholders are the shareholders. So this statement is, I would say, true. Preference shareholders have voting rights. No, they are just a namesake voter. Preference shareholders are guaranteed dividend even company is not making profit. This is also incorrect, because dividends are only provided once the company is having profits. Okay. Preference shareholders are given dividend after giving dividend to common shareholders. No, ये after नहीं होगा, before होगा, because they get preference in the dividend payments. चलिए, now we are moving to question number 49. Question number 49. PFRDA Phase 1 2022. Which of the following mechanism is used for price stability in the share price during IPO? Which of the following is used? Which of the following mechanism is being used for price stability in the share price during initial price offer? Circuit breakers, whitewashing, green shoe option, underwriting, or none of the above? Please tell me your answers. Yes, it's green shoe. Green shoe option में what amount of extra shares company can issue, and this particular issue is available for how many days? No, circuit breakers is just for a risk management technique. It's just a risk management technique. Circuit breaker is not the right answer. Whitewashing also is not the right answer. Underwriting we have already discussed. The right answer is green shoe option, and I will not move by stance. Please tell me under green shoe option what is the percentage of extra shares which company can issue, and it can be issued for how many days? Like what is the time period? Yes, 15% of the issue size, and 30 days के लिए ही green shoe option is there. And by the way, the name of the company which first implemented it was green shoe. Therefore, the name came green shoe option. The last question of my quota. The last question of my quota is coming from question number 50. Which of the following is the regulator of capital markets in India? Which of the following is the regulator of capital markets in India? Capital markets are also known as your security markets, right? Capital markets are also known as your security markets. So capital markets in India are regulated by whom? Is it SEBI? Is it RBI? Is it NPCI? Is it SBI? SBI तो कोई मार्क करी मत देना गलती से भी. SBI is just a bank. It's not a regulator. NSE is also not a regulator. NPCI is a regulator, but for your payment banks. RBI has a very little control in your capital market. The right answer will be option number A, SEBI. Okay. On that note, if I'm not wrong, the right answer, let me check. It's A, right? So answer was option number A. Now to take this lecture ahead, now I will try to call Jaskaran sir. He will come forward and he will take the session ahead. Welcome, Jaskaran sir. So sir, now you will have to take questions from 51 onwards towards 100. All the best. Do well, guys. Now Jaskaran sir will teach you.
So hello everyone, from now I will be continuing the session. So the next question is, which of the following statement is true about payment banks in India? So mark your answers in the comment box, in the chat box. So the first option is payment banks can accept deposits of up to rupees 2 lakhs. Payment banks can issue credit cards. Payment banks can provide loans, and payment banks focus on financial inclusion. So mark your answers in the chat box. Okay, so most of you are writing C as the correct option, and Shrishma has marked A as the right option. So let us see what the right answer is. So the first question, option is payment banks accept deposits up to rupees 2 lakhs. Right answer. Then payment banks can issue credit cards. That is not the case. Then payment banks can provide loans. Do they provide loans? The answer is no. They do not provide loans. And then payment banks focus on financial inclusion. So this is also the correct option. So the right option is going to be 1 and 4. So C is the right answer for this question. And I hope you know about payment banks. So I'm going to ask additional question to you, which is on the recommendation of which committee the payments banks were formed. So write your answers in the comment box. On the recommendations of which committee payment banks were formed. Snarky is writing B. Snarky, no. Payments bank cannot issue credit cards. Though yes, they can issue debit cards. Debit card are issued by payment banks, but not the credit card. So B. So this option is going to be eliminated. So this B cannot be the right answer. The correct answer is going to be 1 and 4. Okay, so most of you have written Nachiket More Committee. Yes, that's the correct answer. Nachiket More Committee. On the basis of Nachiket More Committee, the payments banks were formed in India. Now let us move on to the next question. Which of the following statements is true about the liberalization period in Indian banking? So the first is relaxed licensing requirements, entry of new private and foreign players, emphasis on rural banking only, and modernization and technological innovation. Mark your answers. So many Nachiket is writing C, Ashutosh is writing A. What about others? Guns and glasses C. C. Okay. So the correct answer in this question is going to be, so firstly, during the LPG reforms, what happened as per during that era, relaxed licensing requirements. Yes, this is something that happened because licensing regulations was one of the most important issues that were there in the banking sector at that point of time. Then entry of new foreign and private players. Yes, this also happened because since this licensing requirements, they were relaxed, and this point is an outcome of it. Because of that, new private and the foreign players entered in the banking sector during that period. Then emphasis on rural banking only. Now this keyword only here is very important because the emphasis was not only just with respect to rural banking, but on the with respect to urban banking also. The motive was to make the banking sector as inclusive as possible. So this keyword only, and because of this keyword, this option is going to be the incorrect. Then modernization and technological innovation, of course, that also happened. So C is going to be the correct answer for this question. Can you tell me the name of the committee that recommended these reforms during the LPG era for the banking sector? The name of the committee. Write the name of the committee that recommended these reforms that we have discussed in this answer. Let me see how many of you know the answer. I'm asking the name of the committee. Very important committee for your exam. Yes, Nachiket and Pooja have given the right answer. The answer to this question is Narsimhan Committee. Very important committee for your exam that gave recommendations related to the relaxation of different regulations with respect to the banking sector in our country. Now the next question. Which of the following is not a function of Reserve Bank of India? So write your answers. Which of the following is not a function of the Reserve Bank of India? So the first option is regulating the banking sector. Second is issuing currency. Third, managing foreign exchange reserves. Then implementation of fiscal policy and acting as a banker to the government. So Nilesh is writing D, Nachiket D, Ashutosh and Mayank D. Okay, all of you are marking D as the answer of this question. So of course D is the answer, because fiscal policy is implemented not by RBI but by the government. What RBI implements? RBI implements monetary policy. So fiscal policy is the job of the government and not the RBI. So that is why D is going to be the answer of this question. Now the next question is, which of the following statements about development financial institutions is true? So mark your answers regarding the development financial institutions in India. So DFIs provide long-term financial supports. DFIs focus on short-term loans. They promote economic development and operate primarily in urban areas. So mark your answers. Okay, most of you are writing D. Pooja and Nilesh are writing B. Mayank is writing E. Okay, so multiple answers we are getting. I'll wait for a few other answers also. Okay, B, D and E, three types of answers we are getting. So let us see what is the answer to this question. So DFIs provide long-term financial support. So we know that the one of the important role of the developmental financial banks in our country is to provide long-term lending support to the different kind of financial projects that are there in the country. And the main objective of the developmental institutes or the developmental financial institutes is to promote the economic growth and development in the country. So what is going to be the answer of this question? Firstly, do they provide long-term financial support? The answer is yes. They focus on short-term loans. That is not going to be the option, because their focus is mainly on long-term lending. Then they promote economic development. That is also true. Then DFIs operate primarily. This primarily is the key word that you need to remember, that they primarily operate in urban areas. That is not the something is that is a correct option. So the correct option is going to be 1 and 3. So this is going to be the correct option to this question. They primarily work with respect to the economic development of the country. It does not matter if it is rural region or the urban region. So that is the idea regarding the developmental financial institutions in our country. The next question is, which of the following is true statement about narrow banking? So narrow banking restricts services to holding safe and liquid assets. They engage in high risk lending, then aims to minimize risk and ensure financial stability, and include investment fund banking services. So what is going to be the answer of this one? So let me read your answers. B, 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 B. Okay, all of you are writing B as the right answer. So let me see, read it for you. So it restricts services to holding safe and liquid assets. Yes. So narrow banking is basically when it is a type of banking services where banks usually focus on the safe assets only. So they do not invest or they do not provide lending services to those areas that are risky in nature. So first option is going to be correct. It engages in high risk lending. This is just the opposite point. So this is going to be the wrong one. Narrow banking aims to minimize risk and ensure financial stability. Yes, this is what I told you. both these options are interrelated to each other. And then narrow banking includes investment banking services. That is not going to be the correct option, because for investment banking we have a separate category, which is the investment banks, and this investment banking business is very much risky in nature because of the different fees and the underwriting procedure that are involved. So that is why it is not going to be the correct option, because as I told you, narrow banking involves investing in the safe assets only. So 1 and 3, so the answer of this question is going to be the B1. Now the next question, which of the following statements is true regarding the post-independence period of banking in India? So what do you think is the answer of this question? So RBI was nationalized in 1949. SBI was formed in 1969. Nationalization aims to use banks for social objectives. And 14 banks were nationalized in 1980. So mark your answers. So most of you are writing B as the correct option, which is first and 3. And let me read the question for you. So RBI was nationalized in 1949. Yes, that is a correct option. Then SBI was formed in 1969. The incorrect one. Nationalization aims to use bank for social objectives. That is one of the most important purpose of the nationalization, because if you talk about the pre-nationalization era, then at that point of time the banking sector was mainly controlled by the private sector, and as we know that private sector is a profit oriented entity. So what private banks used to do, they only used to invest or provide banking services only in those regions that are profitable to them. So their main objective was not financial inclusion. So that's when the government entered the banking sector, and what they did, they performed this nationalization in order to meet the objectives of in order to meet the social objectives and the financial inclusion goals. So that is going to be the correct option. And lastly, 14 banks were nationalized in 1980, which is again a wrong option, because 6 banks were nationalized in 1980, which is the second wave of nationalization of banks. So the answer is going to be first and third, which is the B option. Fine. I hope all the options are clear to you. And if I frame another question from this, how many banks were nationalized in the first wave of nationalization? In the first wave of nationalization, how many banks were nationalized? This is about the second wave. So how many banks were nationalized in the first wave? Write your answers. Yes, the answer is 14 banks. So 14 banks were nationalized in the first wave of nationalization, that is in the year 1969. Fine. Now the next question is, which of the following was not a recommendation of the Narasimhan Committee? A similar question to this we have done earlier also. I told you about Narasimhan Committee, so you have to write which of the following was not a recommendation of Narasimhan Committee. Nehul, it's not 12, it's 14. Okay, so let us read the option. Reduction of government control in the banking, then entry of private and foreign players. This is something that it was recommended, because over nationalization was a problem during that era, and that's why the Narasimhan Committee was formed. It was the main objective of Narasimhan Committee to deal with this over nationalization issue with respect to banking sector. And what it recommended the reduction of government control in the banking sector. Then if the government control is getting reduced, then who's role was getting increased. I mean, in order to balance, in order to make this banking sector inclusive as well as profitable. So the entry of private and the foreign banks was increased because of the relaxation with respect to the different regulations in the banking sector. Then complete privatization of all public sector banks. You can see this statement is so extreme. So complete privatization was not there, and modernization and technology, very easy option, and enhancing customer service, which was again an important objective that was recommended as a part of the Narasimhan committee. So the next question: which of the following statements is true about cooperative banks in India? So they cater to the financial needs of customers in rural and urban areas. They are primarily regulated by SEBI. They provide short-term and long-term credits to businessmen and farmers. They do not accept deposits from the public. Nilesh is writing 58C. What about others? Nachiket 58A. Everyone else is writing A. Okay, I'm getting two answers. They do not accept deposit from the public. So this is the wrong option. So because they accept deposit from the public, the members, the public who become a part of their membership, and they accept deposit from them. So that is why this is going to be the wrong option, and A is going to be the correct answer. So 59. Ram and Shah have entered into a leasing agreement. Ram has sold the property to Sham for a sum of 30 lakhs and then got the lease of the same property from Sham at a very nominal rate. What kind of lease agreement is it? So everyone is right. So Rohan is writing C. So the answer is going to be yes, the C. C is going to be the correct answer to this question. Why? Because there are two things happening. Firstly, Ram has sold the property to the Sham. So selling has happened. And at the same time, what the Ram is getting, then Ram got the property on lease. So both the things have happened. Firstly, the property has been sold. It means Sham has lost the ownership, but at the same time, he is able to use that certain property through the leasing agreement. So that's why the answer is going to be the sale and lease back agreement. I hope it is clear to you. Consider the following statement regarding priority sector lending targets of different banks in India. So first is regarding scheduled commercial banks and foreign banks. Then foreign banks with less than 20 have a PSL target of 32% of A and BC. Then RRBs have PSL target of 75%, and SFBs are exempt from maintaining PSL targets. So what do you think is the answer of this question? Okay, so most of you are writing D as the correct answer. Abhinav is writing B. Nilesh 1 and 3. So let us see. So domestic scheduled commercial banks with more than 20 branches are required to allocate 40% of A and BC. Yes, this is right. Then foreign banks with less than 20 have PSL target of 32% of their A and BC. Okay, and then regional rural banks have a PSL target of 75% of their outstanding advances, and small finance banks are exempted from maintaining PSL targets. That is the incorrect option, because they are not exempted. Their PSL targets is 75%. So if we eliminate the fourth option, so most of you would be confused between the B option and the D option. And what do you think is the answer now? Those of you who have written the incorrect option. So the correct answer is going to be the D1, which is 1, 2 and 3, because fourth is the incorrect option. Fine. The next is, consider the following statement regarding cooperative banks in India. Urban cooperative banks are regulated by both RBI and the respective state governments. Urban cooperative banks are allowed to lend to non-agriculture sectors. Then the deposits in cooperative banks are not insured by the DICGC. So mark your answers. Okay, so if we see this question, urban cooperative banks are regulated by RBI and the respective state governments. This is an incorrect option. This used to be the problem, few years back, especially before 2021, when there was different changes with respect to the regulation, because one of the problems with respect to urban cooperative banks was the dual regulation, because they were managed by both state governments and also by the RBI. Now this problem has been solved because urban cooperative banks are regulated by RBI only. So this is going to be the incorrect option. The second is, urban cooperative banks are allowed to lend to non-agriculture sectors. Yes, that is the correct option. There is no problem with it. Then deposits in cooperative banks, it is talking about cooperative banks, not specifically regarding urban cooperative banks, are not insured by the DICGC, which is again a wrong option, because they are insured by DICGC. So what is going to be the correct answer? It is going to be 2 only. So do we have that option over here? So we do not have the option over here. The option is going to be 2 only in this case. Fine, I forgot to change the options. That is okay. You have understood the explanation part. So now the next question is regarding the NABARD. NABARD was established based on the recommendations of the B. Sivaraman Committee. It was set up on 12 July 1982 by the NABARD Act of 1981. It is owned and regulated by RBI. One of its mandates is to provide credit and other facilities for promoting integrated rural development. So mark your answers. Okay, most of you are writing B as the correct option. Let me see the other answers also. So the first option is regarding NABARD was established based on B. Sivaraman Committee. Yes, this is correct. Then it was set up on 12 July 1982 through NABARD Act. That is also the correct option. Then it is owned and regulated by Reserve Bank of India. So this is something that is the incorrect option, because it is owned by Government of India, whereas it is regulated by RBI. So this is something that you need to remember. Then one of its mandates is to provide credit and other facilities to promote rural development. That is also the correct option. So C is incorrect. So 1, 2 and 4. B is going to be the correct answer to this question. So 63. With reference to hybrid annuity model, which of the following statements are correct? So most of you are writing D as the correct option. So let me, anyone else? Somebody is writing discuss 61 again. Yes, I will discuss it again. Do not worry. guns and glasses. I will discuss it again. Just mark the answer of this question number 63. So if you talk about this question, the first option is it is a mix of bought toll and EPC. This is the incorrect option. Why this is incorrect? Because HAM is the mixture of EPC and bought annuity, not bought toll. So that is why first option is incorrect. So not bought toll but annuity. Under HAM, 50% of the cost is borne by the government during the construction phase. Again, this is the incorrect option. Then the private party is compensated through annuity payments by the government. Yes, this is true. And the private party is responsible for the operation and maintenance of the project for the specified post construction period. So this is going to be the correct option. So what is going to be the correct option for this? It is going to be the B one. So if you know this point, in this case of EPC, earlier 40% of the cost is paid as a full-time payment during the EPC, and rest of the 60% as the full-time payment is paid during when the construction phase is ended. So B is going to a correct option. Someone was asking me to repeat the question number 61. So the thing regarding this question is that the urban cooperative banks are regulated by RBI only, not by RBI and the state government. And if you talk about the cooperative banks such as the state cooperative bank, district cooperative banks, urban cooperative banks, then they are insured by DICGC. So this not, because of this not, this option is the incorrect one. So the correct answer to this question is going to be 2 only. So I forgot to write that option. I had to edit it, but 2 only is going to be the correct answer to this question. Now the question number 64 regarding the alternative sources of finance. The lessee has ownership rights to the asset during the lease period. Lease payments are made by the lessee are considered as fixed payment to the lessor. So what do you think is the right answer to this question? So most of you are writing B as the answer. Take your time and answer this question. So the first option is lessee has ownership rights to the asset during the lease period. Does the lessee have the ownership right? The answer is no. He only has the usage right. The first party is the lessor, the one who is the owner of that asset, and the second is the lessee. And when the lease agreement is signed, lessee gets the right to use that certain property or the certain asset. So, but he does not get the ownership rights with respect to the asset. So the first option can be eliminated. Then the lease payments made by the lessee are considered as fixed payments to the lessor. That is the correct option because they are given through the fixed specific payments as according to the contract. Then the financial lease is the type of lease which is typically for a period shorter than the economic life of the asset. So this is the wrong option, because financial lease is basically for those type of assets that have to be held for the long term. So this is not something that is going to the answer of this question, because it is talking about the operating lease, not the financial lease. Financial lease is for the long term assets, for example the land and all such type of assets. So this is going to be the wrong option. And in case of sale and lease back agreement, the asset is sold to the lessor and then leased back to the original. This is also the correct option. So 1 and 4 is going to be the 2 and 4 is going to be the answer of this question, which is the B option. Then which of the following is false with respect to peer-to-peer lending? Please note that the question is asking about the false option. So peer-to-peer lending platforms are classified as NBFCs. Then it is not regulated by RBI. So for 65, everybody is writing B and D. Two type of answers I'm getting. And let us read the options. P2P lending platforms are classified as NBFCs. That is the correct option. Then it is not regulated by RBI, but it is the incorrect option because it is regulated by RBI. Then it leads to low rate of interest for the borrower and high rate of interest for the lender. That is the correct option, and that is why these entities come to the PPP platform, because the borrower is getting favored by achieving the lower interest rate, whereas the lender gets the high rate of interest returns. And then P2P lending is legal in India. Yes, it is legal in India. That is why it is regulated by RBI, and P2P platforms are required to maintain a minimum capital of 2 crores. This is also the correct option. So the incorrect or the false option is going to be the B1, which is the 2 only. Fine. Now the next question. Identify the type of capital buffers which were introduced in Basel III norms and which are maintained in opposition to the cycle of the credit growth cycles. In good times, bank saves money in these buffers, and in tough times, bank takes out money from this buffer and lend it to the outside world. So mark your answers for the question number 66. So yes, as you have written, the correct answer is going to be the counter-cyclic buffer. So what we do in counter-cyclic buffer, during the good times, the economy saves the money, and when the downturn happens in that economy, then the money that it has saved, it is going to use that money during the downturn time. So this is what the counter-cyclic buffer means. So this is going to be the correct option to this question. So 67, hypothecation is practiced in which type of goods? Very much straightforward type of question. This question has been asked in SEBI Phase 1 2020. Yes, the correct option is going to be the A1. So what happens in case of hypothecation? Movable goods are used, and the specific thing regarding hypothecation is that both ownership and the possession of the asset retains with the borrower. That is the key thing regarding the hypothecation, and in this the movable goods are used in case of borrowing. So I hope it is clear to you. Now the next question, 68. Identify the concept which has been launched by various regulatory bodies wherein live testing of new products or services in a controlled test regulatory environment for which regulators may permit certain relaxation for the limited purpose of testing. Very easy question. Rohan, in case of hypothecation, both ownership and possession remains with the borrower only. It is not that it happens in case of both ownership and possession. That's what happened in case of hypothecation. Yes, the answer to this question is the D, which is regulatory sandbox, where different fintech companies apply, they come up with their projects, and on the basis of that, the government helps them so that they can provide them different type of regulatory environment where they may do different type of testings with respect to the initiatives that they have brought, the different experiments that they have brought. So D is going to be the right option. The next is inflation is the rate at which general level of prices for goods and services rises, and in situation of inflation, what is the effect of inflation on the purchasing power of the currency? So mark your answers. Very easy question to answer. What happens in case of inflation with respect to the purchasing power of currency? Yes, Nachiketa is writing C, Nilesh C, Vikhyat C. Okay, everybody is writing C as the correct option. So yes, C is the answer of this question, because what happens in case of inflation, the demand in the market increases because of the increase in the money supply in the economy, and the prices also get increased. So because of the increase in prices and because of the increase in the money supply in the market that is there in the economy, the purchasing power with respect to the prices of the money falls. So the purchasing power of the consumer also falls. So that is what happens, is the effect of inflation on the purchasing power of the currency. Then the next is, there is no single theory for cause of inflation that is universally agreed upon by economists and academics, but there are few hypotheses that are commonly held. In the same regard, identify the cause of inflation wherein the inflation occurs when firms respond to rising costs by increasing prices in order to protect their profit margins. So a bit lengthy question, but you can answer it. Very easy to answer. Was 70. Pooja is writing E, Pratiksha E, Nachiketa is saying D, Vikhyat E, Mayank is writing A. So the correct option to this question is going to be the E1, which is cost push inflation. Why cost push inflation? Because what has been asked in the question, firms respond to rising cost by increasing prices. So why this cost are rising? It is mainly because of the supply side constraints. So because of the supply side constraints, for example, because of the increase in the transportation cost, because of the expensive raw materials, or because of the changes in the taxation, all such kind of things, what is happening? Because of this, the cost of production of this manufacturing company is increasing, and in order to balance that part, what they are doing, they are increasing the prices of their products so that they can balance that part, they can provide wages to their employees, all such type of things. And it happens in effect to what? It happens in effect to cost push inflation. I hope it is clear to you. I hope you know the difference between demand and the cost push inflation. In case of demand pull inflation, there is a lot of increase in money supply in the economy, and because of which the capacity of the consumers to spend increases, and because of which prices get increased. But in case of cost push inflation, what happens? It is because of the supply side constraints, because of the changes in the supply side mechanism. And this is what has been asked as a part of the question. And in order to counter that, what companies do, they increase the prices of their product so that they can protect their profit margins. Now the question number 71. Which type of consumer price index is used by RBI for the purpose of inflation targeting in India? Very easy question to answer. So Nachiketa is saying E, Rohan E, Vikhyat, Pooja, Shrestha, everybody is marking E. So yes, E is the answer to this question. And can you tell me who releases this CPI combined index? It is released by whom? CPI combined is released by which entity? Can you name that body? Yes, MOSPI. And under MOSPI, it is NSO, National Statistical Office, that comes under MOSPI, Ministry of Statistical programming and implementation. So I hope it is clear to you. Then the next question is regarding fiscal consolidation and the FRBM Act. So FRBM Act was passed in which year? Okay, most of you writing B, B, D, B, D. So the correct answer to this question is the C1, which is 2003. So as we know what the FRBM Act is all about, so it is it gives the targets to the government with respect to the fiscal deficit and the revenue deficit. Can you tell me a specific clause that is mentioned as a part of FRBM that gives the exemption to the government to move away from these targets of fiscal deficit and the revenue deficit? What is the name of that clause? Yes, Vikhyat has given the correct answer. It is known as escape clause, which under different circumstances gives the flexibility to the government to move away from the fiscal deficit and revenue deficit target. For example, during the natural calamity or during the structural reforms by the government, different type of scenarios, escape clause can be used by the government. So the correct option is the C. The next is under the deposit insurance scheme, the insurance cover is limited to dash rupees per depositor. What will come in place of dash or X? So everybody is writing E as the correct answer. What about others? I want all of you to write your answers. So yes, the correct answer to this question is going to be the E. DICGC, we know it guarantees the deposits with respect to the banks, and it is the fully owned subsidiary of RBI, and the insurance cover is limited to rupees 5 lakh. Now the next question is identify the tool which is used by RBI to identify material and critical risk that a bank may potentially face, and through a focused supervisory review process assess the bank's ability to manage the potential risk along the financial vulnerability to adverse outcomes. So tell me the answer of this question. Okay, so most of you are writing A as the answer of this question. A. Okay, so risk-based supervision, yes, this is going to be the answer. Earlier, what used to happen, RBI used to follow these CAMELS norms, but now they have shifted to this risk-based supervision framework. And under this risk-based supervision framework, RBI analyzes different kind of material and other type of risk and critical risk with respect to a certain bank. And on the basis of the assessment of those risks, RBI supervises those banks. So that is why it is known as risk-based supervision. So I hope it is clear to you. Now the next question is the Nidhi companies are regulated by which of the following regulators? So very easy question to answer. So SEBI, RBI or MCA? Most of you writing C, 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 C. Yes, C is going to be the correct answer to this question. Nidhi companies are basically the NBFCs that give credits only to their members, and they are registered under the Companies Act 2013 and are regulated by Ministry of Corporate Affairs. I hope it is clear to you. Now you can read the explanation from the PDF. So 76, Exim Bank is the premium export finance institutions of the country that seeks to build value by integrating foreign trade and investment with the economic rise of India. Exim Bank started its operation in which year? Okay, so most of you are writing B as the answer. I want everyone to participate. Write whatever you think the answer of this question is. Okay, so the correct answer to this question is the B, which is 1982. Now, if I ask you who is the owner of the Exim Bank and who is the regulator of Exim Bank, so tell me about this also. Who is going to be the owner of this bank? Firstly, tell about the owner. Who is the owner of the Exim Bank and who is the regulator of the Exim Bank? Yes, the owner of the Exim Bank is the Government of India, whereas the regulator will be RBI. Now tell me, under Government of India, which ministry? Which ministry is the owner of Exim Bank? Is it Ministry of Commerce, then Ministry of Finance, any ministry that you think? Yes, Ministry of Finance is the answer. Ministry of Finance is the one who sees this Exim Bank, who is the owner of this Exim Bank, and it is regulated by RBI. Now the next question. NABARD was established by the recommendations of which of the following committee? Though we have already discussed this part of the question in one of our previous questions, but you can answer it. No, Mansi, it's not Ministry of External Affairs. It is Ministry of Finance. Yes, B. Sivaraman Committee, on the recommendation of whom the NABARD was established in India. Fine. So the question number 78, the Phillips curves is a relationship between which two parameters? Inflation and unemployment, quantity demand, price, demand supply, what? Yes. So the answer to this question is going to be inflation and unemployment. And can you tell me does it represent the direct relationship or the inverse relationship? What type of relationship does the Phillips curve show between inflation and unemployment? Very easy to answer. Direct or inverse relationship? Yes, Mayank, correct. It's the inverse relationship. It says when the unemployment increases, then the inflation shows the decrease. And when the inflation increases, then the unemployment reduces. This is a relationship that is shown by the Phillips curve. Now the next question, SEBI supplanted the office of Controller of Capital Issues. SEBI basically came into existence as a non-statutory body in which year? SEBI came into existence as a non-statutory body in which year? Okay, few of you are writing A, others are writing D. So it's a bit tricky question, though easy to answer. So the question is regarding SEBI basically came into existence as a non-statutory body in which year? So when we talk about the non-statutory SEBI as a non-statutory body, then it came into year 1988. But when it came into existence in 1988, at that time it was non-statutory. But if the question was that SEBI came into existence as a statutory body, in which year? At which year the government passed the SEBI Act so that SEBI became a statutory body? The year is 1992, in which SEBI became a statutory body. So these are the 2 years that you need to remember with respect to SEBI, because the question becomes tricky when we keep in mind these parameters. So in 1988, it came into existence as a non-statutory body. In 1992, it became a statutory body. Fine. Now the next question regarding the proportional tax. So proportional tax is also known as what? Nilesh is writing E. Pooja E. Vikhyat E. Mayank E. Pratiksha Ek. Okay, so Ritobrat. Okay, everybody is writing E as the answer to this question. So yes, E is the correct answer. We all know what proportional tax is, that the tax rate remains same, does not matter what your income is. Income does not affect the tax rate. So that's what the proportional tax is, irrespective of your income, that a certain tax is decided for the different individuals in an economy. So that is what the proportional tax is, and it is also known as the flat rate tax system. So moving on to question number 81. Identify the concept which refers to money that leaves the country through various channels and makes its way back into the country, often as a foreign investment. This involves black money and is allegedly often used for stock price manipulation. So write the answer of this question. Nilesh is writing D and Mayank is writing E. Mayank has deleted the message. Fine. So the correct answer of this question is the round tipping. And what happens in case of round tipping is that it is a strategy that is used by the different individuals, big businessmen, for the sake of tax evasion. And what they will do, they will set up a shell company abroad where there are the tax regulations are not very much stringent, where they are very much relaxed. So they will establish a shell company over there and they will transfer their money into that shell company. And what will happen after that, then they will again transfer this money to their country, because they have already paid the tax in the tax haven countries through the shell companies, and that's how they evade through the for tax payment. And that's how this round tipping works. Fine. So D is going to the correct answer of this question. The next is regarding the public private partnership. So answer this question. As per the terms and conditions, the company will finance and design the project. The operations and maintenance will be taken care by the company, and company is not required to transfer the facility to the government. What kind of PPP are we referring to? Yes, Vikyat, sorry. It's stripping, not tipping. Thanks for the correction. Round tripping. It was a typo. So answer this question. Question number 82. D, guns and gases is writing C. Okay, so the key word to answer this question is the operations and maintenance will be taken care by the company, and company is not required to transfer the facility to the government. This is the key word. So when the company is not required to transfer the facility back to the government, it means it is talking about build, own and operate, because the transfer is not there. The government cannot force the company to return the property back to the government. So that is going to be the answer to this question, and other options are very easy to eliminate. In the previous session we discussed what the ham model is in a detailed manner. Then the boot involves the transfer, then design, build, maintenance, all such type of things. So basically it is asking about build, own and operate. It has built, it has operated, and now the transfer is not mandatory. So C is going to be the correct answer to this question. Now the next question, Banking Regulation Act Amendment Bill was passed in the year dash to bring the cooperatives under the supervision of the banks. So in which year it happened? I've already explained you regarding this supervision of the cooperative banks by RBI. I just told you that earlier there was a problem of dual regulation, but now it is regulated by RBI with respect to the urban cooperative banks. So tell me in which year this bill was passed by the government. Yes, most of you have given the right answer. The correct answer to this question is the year 2020. Very much factual question. Now the question number 84, which of the following is not included in the foreign exchange reserves? This question is very easy to answer. No, Richard, it's not design, build, maintain, because in the question the designing part was not mentioned. The question was regarding building and operating. Pooja is writing E. What about others? Nilesh is also writing E as the answer to this question. Okay, everybody is writing E. So yes, E is going to be the answer of this question, reserve position with World Bank. Fine. Now let us see the, sorry. Okay, it is asking about not included. Great. So since reserve position is with IMF, so it is not with the World Bank. So E is going to be the answer to this question. Great. So question number 85. New Development Bank was founded by which group? Question number 85. New Development Bank was founded by which group? Yes, Vikhyat has given the correct answer, and also Nilesh, which is BRICS. Can you tell me how many members are there in the BRICS currently? How many total members are there in the BRICS? Total number of members in the BRICS. Yes, everyone is writing 10 as the correct answer. Can you tell me who are the recent countries that have joined the BRICS? The recent countries that have joined the BRICS. The first one is, tell me, the first one is UAE. Then we have Saudi Arabia. We have Iran also. Then Egypt. And also the last one, Ethiopia. New 5 countries have joined the BRICS. But if the question asks you who are the founding member of BRICS, then the answer is going to be changed. Fine. Also another question is, as per which summit this new development bank was formed? As per which summit? Can you write the name of this summit during which the new development bank was founded? With which summit new development bank was formed? It was a declaration. Think about it. You must have read it somewhere. As per which declaration the new development bank was found? The BRICS member decided that they want to create the new development banks. It was Fort Zella Declaration. Fort Zella Declaration. Fort Zella Declaration. Fine. Now the next question. 86. Which of the following types of inflation is been described in this line? And if you have attended the previous sessions, I've already talked about this certain type of inflation, and I gave you the same examples also, that it happened in case of Latin American countries and also during the post-disintegration period of Russia. I gave you the example when we talked about it. So if you have attended previous session, you know the answer to this question. Okay, there I'm getting 2 answers, A and B. The correct answer to this question is the galloping inflation. I told you that galloping inflation occurred in late 1970s in the Latin American countries, and there in the previous session I told you regarding hyperinflation also, and we have already discussed about stagflation in our previous sessions, where the country's economic growth is stagnant and the inflation is high and there is high rate of unemployment. And lastly, the bottleneck inflation also, which is because of the supply side constraints. So the answer to this question is the A, which is galloping inflation. Next question, 87. Match the following. Deflation, stagflation, disinflation. Stagflation, I just told you what is stagflation. You can easily match the stagflation. So mark your answers. Okay, few of you are writing E, Richard E, Drishti A, Abhiruchi E, EDA. Three type of answers I'm getting. So the answer to this question is E option. How is going to be the answer? So I just explained what stagflation is. When the economy is stagnant, unemployment is high and inflation is also high. So which is going to be stagflation in this case? It is going to be the C one. So 2 is for C. And the next is regarding difference between deflation and disinflation. So in this disinflation, what happens? The rate of inflation gets reduced, whereas what happens in case of deflation is just the opposite of inflation. So if we match these options also, so for 3 it is going to be the A, so reduction of the rate of inflation. So for 3 it's A, and for first it is going to be the B1. When there is general fall in the level of prices. If the question is regarding which of the following is the opposite of inflation, so the answer is going to be the deflation, which is opposite of inflation. Fine. Whereas disinflation has during the disinflation, reduction of rate of inflation takes place. So question number 88. Which of the following is incorrect regarding Monetary Policy Committee? So it is asking about the incorrect option. Monetary Policy Committee is a committee of the central bank headed by governor. Then there will be 3 government members appointed as on recommendations of a committee headed by finance ministers. So how many members we have in Monetary Policy Committee? We have total 6 members. 3 members come from RBI, whereas other 3 come from Government of India. So this question is regarding Monetary Policy Committee. So is a committee headed by governor of RBI. So yes, this option is correct. The RBI governor is going to be the head of this committee. Then let us read the C option. Each members will have 1 vote. Yes, there is 1 vote criteria when we talk about the Monetary Policy Committee. Then the meetings of the MPC will be held at least 4 times a year, and it will publish its decisions after such meetings. Yes, that is also the correct option. It is held 4 times a year. Then there will be 3 members appointed on recommendations of committee. So yes, 3 government members are also appointed. I've already told you. But is it headed by finance minister? The answer is no. It is headed by cabinet secretary. Fine. So this is where the difference lies with respect to it. It is headed by the secretary, cabinet secretary, and not by the finance minister. That is why B is the incorrect option and is the answer to this question. Fine. Now let us move on to the next answer. Utkarsh borrow rupees 50 lakhs from the banks and he gives his land as a security. In case he fails to make the required payment, then the bank can sell the land and get their money back. What kind of loan is been discussed above? Yes, Vikyat. So very easy question to answer, nothing much to think about it. The question is very much straightforward. He gives land as a security. Since the security is involved, so the answer is going to be the secured loan. Fine, very much easy question, and I hope you all have given the correct answer. B, 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 B. Yes, everybody has given the right answer to this question. So B is going to be the correct answer. Now the question number 90. As per the RBI Act 1934, which schedule classifies a bank as a scheduled commercial bank in India? Schedule 2, 4, 5, 6 or 3? Very easy question. Yes, A is the answer to this question. I know all of you will give the correct answer to this question. So as per second schedule of the RBI Act 1934, the banks that are listed under the second schedule, they are called as scheduled banks. Fine. So that is the idea, and they are strictly regulated by RBI, unlike the non-scheduled banks. That dash involves trading in public companies stock by someone who has non-public material information about that stock for any reason. So write the answer of the question number 91. Yes, very much easy to answer. The answer to this question is insider trading. What happens in case of insider trading? In case you have a certain non-public information with respect to a certain company stock, then you are, as per SEBI regulations, you are not allowed to disclose that non-public information to the public, as it may lead to the different type of fluctuations in the market. It may be fake news also. For the different type of such regulations, we have a special criteria with respect to insider trading. So insider trading involves trading a public's company's stock by someone who has non-public material information about the stock for any reason. So E is going to be the correct answer. Now the next question, which is 92. Which of the following is a regulator of capital market? Very, very easy question. Who regulates capital market? Everybody can answer this question. Yes. Correct answer. SEBI is going to the correct answer to this question. Nothing much to explain. We all know capital market is regulated by SEBI. Question number 93. Which of the following is a type of direct tax? I have asked this question previously also. So for the sake of revision, answer this question. Which of the following is a type of direct tax? Which of the following is a type of direct tax? Security transaction tax, commodities transaction tax, capital gains tax, custom duty, minimum alternate tax. Which one? Okay, let us see the answer. So security transaction tax, yes, it is a type of direct tax. Then commodity transaction tax, that is there on the different commodities. Yes, it is also on the direct tax because of its tax base. Then capital gains tax, yes, it is also a direct tax. Then if we talk about MAT, which is 18.5% in India on the zero tax companies, yes, it is also a direct tax. Lastly, custom duty. It is a type of indirect tax that is there on the imports and exports. So custom duty is not going to be a part of this list. That is why 1, 2, 3 and 5. So 1, 2, okay. E is going to be the correct answer to this question. And all of you have marked the correct answer. Now the next question. What type of ATMs are completely owned and managed by non-bank entities? Again, very easy question, very much straightforward. I have asked it in one of our previous sessions also. Which type of ATMs are completely owned and managed by non-banking entities? The key word is completely. Yes, everybody has given the right answer except Ritubrata. It's okay, Ritubrata. I'm happy that you have tried. So the correct answer to this question is going to be the white label ATMs. If we talk about the difference between brown labeled and white label ATMs, then in case of brown label ATMs, the cash is given by whom? It is given by the banks. And in case of white label ATMs, the cash is given by whom? It is given by given by banks. But in case of brown label ATMs, the cash is managed by whom? It is by banks. Whereas in case of white label ATMs, the cash is managed by the non-banking entities. So that is the difference between white label and brown label. And also in case of white label, there is no certain type of branding of any banking entity. That is why they are considered as white, unlike the brown label ATMs. So that is the difference between them, and B is going to be the answer to this question. 95. Which of the following is a non-negotiable instrument? This question has been asked in SEBI Phase 1 2020. So B and D, two type of answers I'm getting. Ritubrata B, Drishti B, Mansi B, Mayank D. Okay, so the answer to this question is the currency notes. What are negotiable instruments that are transferable in nature and also give some form of legal guarantee to the holder who is holding that certain negotiable instrument. So these are the two things that you need to remember about negotiable instruments. And all the promissory notes and the bills of exchange, checks, demand drafts, all are type of negotiable instruments. But when we talk about currency notes, they are non-negotiable in nature because they do not give any type of legal ownership to the holder that is holding a certain type of currency note, unlike the other options. So B is going to be the answer to this question. Now the question number 96. Which type of check can be encashed by anyone who presents it to the bank? Very easy to answer. Straightforward question. Let me see your answers. B, 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 B. Okay, everybody is giving the correct answer. So the correct answer to this question is the bearer check that can be encashed by anyone who presents them, and that is the reason why they are very much risky in nature. So unlike the other form of checks, they can be encashed by anyone. If we talk about the cross check, cross checks cannot be encashed by anyone. They have to be directly deposited to the bank account of the person, of the payee on whose name the check is. Then we have order check also, account pay check, and the post dated check. But when we talk about the bearer check, they can be cashed by anyone who presents it to the bank. 97. Which of the following institutions is also known as lender of last resort? I discussed this question earlier also. Let me see how many of you can answer it now. Last time many of you had marked it incorrectly. And this question has been asked in SEBI Phase 1 2020. The question is very much easy to answer. Yes, the answer is going to be the RBI. Fine. So when we talk about the lender of last resort, then the RBI acts as lender of last resort to the different financial institutions, and this is something that you have to remember. And one another information that you have to remember is that RBI acts as a lender of last resort to the financial institutions, but not to the government, because government have strict constraints with respect to lending from the RBI. Government takes lending from the RBI through the ways and means advances. But when we talk about the different financial institutions, to them RBI acts as lender of last resort. But if the question is RBI acts as banker to whom? To the government or to the financial institutions? Then the answer is going to be both government and financial institutions. It can act banker to both government and financial institutions, but when we talk about the lender of last resort, it is the lender of last resort only to the financial institutions. Fine. I hope you have this clarity. Now the next question, 98. What is the name of the model under PPP in which private player is fully responsible for construction, operation and maintenance of the project, provides working capital and investment, and is also responsible for providing for profit and loss, but the ownership is with the public sector? So quickly answer this question also. Okay. So 98D, Ritubrata is writing C. Anyone else? Pratiksha is also writing D. Okay, Mayank is also writing D. So the correct answer to this question is going to be the D only. Why D? Because the differentiating factor, I mean, most of you who have read this chapter would be confused between the option C, option 3 and option 4. So the differentiating keyword is here, the investment, because both lease contract and financial concessions are a type of delegated management contracts. And in case of these two contracts, what happened? The responsibility is transferred to the private party, but the ownership stays with the government. So what is the differentiating factor between lease and the concession? In case of lease, if any type of additional investment has to be done, if any type of additional facility has to be added with respect to the project, then the private party is not going to take the responsibility with respect to that. But in case of concession, what happens? The only difference is that in case of concession, additional facility, additional investment is done by the private sector. So that is what has been asked as a part of the question, and that is why option 4 is going to be the right answer, which is concessions. Fine. Now the question number 99. Yes, Pooja, very precisely you have given the explanation. Regarding the angel investors, so angel investor invest less amount as compared to venture capitalist. Angel investor mainly established in invest mainly established businesses, whereas venture capitalists mainly invest in startups, then investors are not involved much in day-to-day functioning of the business activity. Which one do you think is the answer of this question? Yes, B is going to be the correct answer, because we know that what angel investors do, they usually invest in the small startups, whereas when we talk about the venture capitalists, they are well established businessmen who usually invest only in those businesses that have a huge potential to growth, that can provide them maximum profit in the future, unlike the intention of the angel investors. So in this case, the option B is going to be the answer of this question. Fine, because the question is asking about the incorrect statement. So I hope it is clear to you. Now the last question. Identify the open mutual fund scheme where there is a 3 lock-in period. Very easy question. I've discussed this question earlier also. Quickly write down the answer. Yes, everybody has given the right answer, which is equity linked savings scheme. What happens in case of equity linked savings scheme is that these are the type of mutual funds where you invest in the equities and there is a 3-year lock-in period. In addition to that, the government also provide many tax incentives if you invest in the equity linked savings scheme. Tax incentives as per Income Tax Act. So that is the idea regarding equity linked savings scheme, and A is going to be the right answer to this question. So now we are done with the 100 questions. The PDF of this session will be uploaded in the Telegram channel, and I hope this session was helpful to you. And what you can do, those of you who are going to watch the video later, you can write your answers in the chat comment box, which answers you were able to mark correctly. And that is it for today. Thank you so much and all the best for your exam. So now I'm ending the session.